Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, July 10th, and we had a second dose of Jerome Powell testifying to the House. And today I definitely took a red day. We had a lot of big moves, much bigger than the trading ranges, and today was just not my day. It's okay. How many trading days do we have in a year? About 200, and I don't take too many red days, so I'm a little grumpy about it, but it is what it is. And let's start with SPY. We did open today with a gap up to previous all-time highs that we made the day before, and from there we kind of came into that gap and found support right away and pushed up. Now, Jerome Powell started speaking right here around 10 o'clock, so right there we found support, pushed up. The top of the implied move was at 559. We broke right through that, didn't look back, got above tomorrow's implied move at 561, and came completely out of the trading range, closed up 0.99%. VIX also closed up 2.72%. That is because we do have CPI and PPI tomorrow. That's not necessarily a bearish signal all on its own. That just means that we're expecting a range expansion for the next 2 days. And we did not trade even close to the implied move today. We came right out of it right away. By noon, we were above it, and then we just did not look back. So that was SPY. Switching over to QQQ, we did open up here as well. We gapped up to previous all-time highs, which were 500 even. We saw a little pushback there. We got into this gap, closed it most of the way, about 2/3 of the way, and then found support at that level. Again, Jerome Powell started speaking right here on that second candle. We dropped down just a little and then popped up to the top of the implied move right here and pushed above that, and then we got just underneath the top of tomorrow's trading range. Tomorrow's implied move. So not as big of a move as in SPY and SPX compared to the 30-day average, but still a pretty massive move. Up 1.04%. VXN closed up 1.53%. And here again, we did not trade within the implied move. Switching over to SPX, this is where I got burned today. We opened with a gap up. Pretty much immediately, Jerome Powell started speaking 10 o'clock. We pushed up, got above the top of the implied move. The implied move was really small for today. It was just 0.37%. That is what options were saying. I don't make these numbers up. That's just what options said last night. And we got above that pretty quickly and pushed all the way outside of the trading range. So even above tomorrow's top of the implied move. So really big move in SPX, up 1.02%. VIX again up 2.72%. And we did not close within the implied move today. And IWM joined the party today, and we opened with a gap up to about halfway up the implied move. Then it dropped back down to the 35 EMA, found support there, and then bounced up. Had a really big day, also closed outside of the implied move. The implied move in IWM was 0.9%, and we closed up 0.98%. VX did close up 2.16%, and here we also did not close within the implied move. So massive moves today on low volume. Tomorrow we do have CPI in pre-market at 8:30 Eastern, and on Friday we have PPI at the same time, 8:30 Eastern. So let's go check out tomorrow's levels. Alright, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like Leave me a comment today, cheer me up after my big red day, and don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Alright, so starting in SPY, tomorrow's implied move is between 557 and 566, and that is from options. And the 30-day average volatility, $5 wider. Remember, today we did take it all the way to the top of the 30-day average volatility. So even though we don't always take it all the way to the edge of the trading range, it is possible, and we did see that today. And then on Friday's contract, which we have PPI, the implied move is between 556 and 567. To the upside, we do have the fresh new all-time highs we made today. That's at 561.67. That is directly above where we closed today. And then if we get above that, if we keep melting up after CPI, the top of the implied move is at 566. The top of the implied move for Friday's contract, 567. And the 30-day average volatility, 568. And then to the downside, we do have the 35 EMA. This is on the 30-minute time frame, and we have been trading above it ever since we bounced on the 30-minute 200 moving average, then got above that level, and we've been trading high above that. And really, it's been defining this uptrend. So that 35 EMA is cutting right through that bottom corner into the bottom of the implied move. Just underneath that, we do have the up gap from today that is still open. We did drop into it just a little bit and then pushed up. So the bottom of that gap is at 556. That is also the bottom of Friday's implied move. And then underneath all of it, we have the 30-minute 200 moving average, and the momentum on that is still up. So if we do find ourselves near that level, just know that it might give us a little pop back up, even if it is temporary. And then switching over to QQQ, the implied move over here is between 497 and 508. That is from options. The 30-day average volatility, 494 to 512. And the implied move on Friday's contract, 496 to 509. To the upside, we do have the new all-time highs that we made today at 503.52. Above that is uncharted territory, but if we do get up here and see some momentum from CPI, the top of the implied move is at 508. The top of the implied move on Friday's contract is 509. To the downside, we have the 35 EMA. Let me add that in here and switch that to red. So 35 EMA is just underneath us. It has been a clear support. And if that level does not hold, if inflation comes in super hot and we lose that level, the bottom of the implied move for tomorrow is 497 and 496 on Friday's contract. Underneath the trading range tomorrow, we do have this gap right here. That is from the 4th of July. And we had that half day before, then we had 4th of July. After 4th of July, we gapped up, and that is at 491. And underneath all of that, we have the 30-minute 200 moving average, still with that positive momentum. We're still bullish, even a pullback down to the 30-minute 200 moving average. We could see a bounce at that level, just like we saw back here. But that is close enough to our trading range that it should at least be on your radar. And then switching over to SPX, the implied move over here is between 55.95 and 56.75. That's from options. The 30-day average volatility is, give me 1 second to move that. Okay, 30-day average volatility, 55.70 to 5700. And the implied move on Friday's contract is between 55.80 and 56.80. So that is almost $100 trading range on Friday's contract, almost $50 in each direction. To the upside, and I'm not even going to say to the upside because it's right where we closed, is all-time highs, 56.33.92. We did make new all-time highs with today's closing tick. So if we get above that and we see some momentum to the upside, 56.75 is the top of the implied move for tomorrow. and 56.80 is the top of Friday's contract. To the downside, 35 EMA, it is currently just underneath the implied move, but coming into the bottom here, so within 30 minutes to an hour, it'll be in the trading range, and it is cutting through the bottom of the implied move. The 35 EMA is a super important level, and it definitely provides support if we are going to stay bullish. And just underneath that, 55.95 is the bottom of the implied move. Bottom of the implied move on Friday's contract is 55.80. And then at the bottom of the trading range tomorrow, we have two up gaps. This is from Tuesday going into Wednesday. We had a gap up that didn't fill. And Wednesday going into, do I have that wrong? Yeah, this is Monday going into Tuesday, and Tuesday going into Wednesday of this week. We had two up gaps that could offer some support if we do drop tomorrow. And I would be willing to bet that if we did drop down to here, that we would definitely see a technical bounce back into this level right here. And then underneath the trading range, pretty far away, we are definitely due for at least getting closer to that level. 30-minute 200 moving average, definitely the momentum is still up, and that is very clear. And last time we saw that level, we bounced on it twice. So we are currently trading pretty far away from it. We are, say, about almost 2% away. And a pullback down to here would be the healthy thing. All right, and IWM? IWM's trading range is actually pretty big for what we've been seeing, and we do have the implied move between 200 and 207. That is from options. The 30-day average volatility, 199. No 30-day average volatility. That is actually much more narrow, and we're not using that. What I meant to say is the implied move on Friday's contract. So 199 to 208, and to the upside, we are currently at a resistance level, so we have had difficulty getting above this 203, let's call it 204 level. So we did close at a resistance, and then we saw resistance here and right here at, let's call it 203.5. And if we get above that, if we follow through on this breakout, then the top of the implied move is at 207, and then the top of the implied move on Friday's contract is 208. And let me just check something, because we did have a there you go. So at the top of, or in the upper half of the trading range, we do have a downtrend line to look for. So that is around 204. So yeah, if we break out above that, then 207 to the upside. And then to the downside, we do have the 35 EMA. Today we did bounce on that level. It did act as a support. So that is the first level to the downside. The 35, so that was the 35 EMA. The 30-minute 200 moving average just underneath it is starting to curl upward. We did bounce here on Tuesday. Then today we bounced on the 35 EMA. So we are moving up, looking a little bit more bullish. So that 30-minute 200 moving average is the next level to look for. We do have the up gap from this morning that didn't fill. So at 201 is where we have support. Underneath that, we have the bottom of the implied move that is at 200. And then we also saw a support at that level on last Friday. We do also have higher lows happening, and that is a level just underneath the 30-minute 200 moving average. It'll be interesting to see which way we break out of this. And I didn't mention the bottom of the implied move on Friday's contract, 199. And then just to add one more level outside of that, we did see support at around 197. And if that breaks, we don't have a whole lot of support under that. So IWM definitely fighting to break out of this downtrend it's been in all year. and definitely seeing some positive signs. Inflation data tomorrow, if it does come in hot, IWM will probably be the worst hit because inflation is hardest on small businesses. So be aware of that. That's all I've got for tonight. Have fun, trade safe, make sure you take profits when you're up, and I'll see you guys tomorrow night.